morning, everyone, and welcome to this edition of Market FataFat right here on ET Now. The markets are holding out quite smartly. The credit policy is going to be keenly watched come this week. But for now, we have a whole host of stocks that we'll be flagging off. Our research analysts are all standing by, and Sameet Chavan as well as Kunal both are with us on the technicals. Well, let's get started then. And Mubina, start off by talking about Sun Pharma, clearly under pressure today.
Well, yes, and I would say that this would be one of the key draggers on the Nifty index as well. It's down by almost 8%, one of the biggest intraday falls we've witnessed in the stock in at least since May 2017. It's fallen as well the most in 3 weeks, and this is on account of the fact that reports are suggesting that SEBI may reopen the insider trading case. They are going to investigate into alleged lapses by some of its promoters. There were as well some whistleblower reports about some lapses in overseas borrowing, which has been submitted by the whistleblower to the regulator. So let's see what happens over there, especially what will be Sun Pharma's stance. Remember, they're holding a conference call today at 6:30 p.m. That we are going to be watching out for. Let's see what the company has to say in defense. For now, they've not yet come out with any official statement.
All right, that's the take coming in. We'll have to wait and watch what exactly the management has to say, but a whistleblower there with Sun Pharma. Moving on to stock number 2 from Midcap IT, it is MindTree. And Kunal, why does this catch your eye today?
Interestingly, Avan, last week the stock saw a breakout, I think after 1 month of remaining absolutely sideways, I think in a 60 or 65 point range, the stock managed to break out. And today we are seeing a mild bit of follow through, at least, that was the case in the first, hour of trading. But I still believe that the stock has, strong potential. The indicators on, many time frame charts, daily, weekly as well, I think have shown, very strong, robust price action. So I believe that that should reflect into the stock prices as well. Would suggest a buy on MindTree, targets of 950 on a positional basis.
Watch out, that's the take coming in on MindTree. Moving right on, Karunya, is she with us or not? Okay, I'll just talk a little bit about the crude oil prices then. And do remember, we are seeing Brent crude prices rallying, and we've seen the biggest rise for Brent crude prices in the last 1 year. In fact, it continues to remain a big headline as well with respect to crude oil prices and the way that they have been, in fact, shaping up. We have seen a rebound in the oil futures as well after clocking in their worst monthly side in over a decade. We do know that Russia as well as Saudi Arabia are going to agree to extend that deal to destabilize prices. But for now, you have all of the oil marketing companies which have been fairly choppy of late that are under a bit of pressure. On the back of that, HPCL, BPCL and IOC are under pressure. Moving right on then, let's also pull up a Maruti. Remember, you had the auto sales numbers as well coming in, and it's not been the most encouraging set to say the least. In fact, it's been the 4th straight quarter of a decline in the auto sales numbers. Macquarie Bajaj has come out with their report, and they seem to be very gung-ho on the prospects. In fact, they maintain an outperform with a target price at 9,000 rupees. They say that the receding headwinds will help to improve the outlook, and they expect car demand to improve gradually. Very flat as we speak. OBC then, meantime, that one is also in focus. Let's get in Siddharth, who joins in with a heads up. Siddharth.
Well, Avan, though Nifty is on verge of getting into red territory, we are seeing Oriental Bank of Commerce holding on its gains. We are seeing some decent amount of consolidation taking place, and in today's trading session, there is formation of long positions. And if a PSU, mid-cap PSU stock is not correcting from higher levels, and if you're seeing built up, needless to mention that this is long position. And anyway, stock has shown a decent upside traction from 60 to 90 odd levels. There has been consolidation around 2 to 3 weeks around this 90-91 resistance zone, and stock is showing signs of pickup.
All right, watch out. That's the take coming in on OBC, up 0.6%. Meantime, it's Jubilant FoodWorks as well, and let's understand who's taking a bite out of this one. Sameet, what's the take?
See, this stock has already given a smart recovery from lower levels, nearly 25-30% recovery in last 3 to 4 weeks, and today the stock has managed to surpass its 200-day moving average, which has been acting as a strong hurdle since last 1 week. So the stock has managed to surpass its important level, and if we just look at the volume activity in cash segment, yes, it has picked up substantially, and thus going ahead we expect this stock to continue this ongoing momentum. We won't be surprised to see this stock heading toward 1350, 1380 over the next few days. That's
the take coming in on Jubilant FoodWorks, currently holding out by about 4%. Let's shift gears then and talk about RK Forgings as well, and Mobina, talk a little bit about the bulk deals.
Well, yes, and very important names who have actually changed hands in RK Forgings. We have had Amansa Holdings, which has decided to sell about 2.9 lakh shares at 515 rupees. But instead of them, a backers growth fund, basically Sunil Singhania's firm, has bought about 5 lakh shares. And we also have Old Bridge Capital, Kenneth Andrade's Old Bridge Capital, which has bought another 8 lakh shares. So names changing hands, Sunil Singhania and Kenneth Andrade checking in, while Amansa moving out of RK Forgings, selling 2.9 lakh shares.
All right, keep an eye out on that. Clearly, there's been some interesting fund activity. Meantime, let's also chat a little bit about what's going on in the world of metals. Vedanta is a stock in focus. All of these stocks seems to be rallying. Let's get in Karunya to give us a heads up. Karunya.
Well, a lot of metal stocks are in focus given the kind of rally seen in the entire metals basket, entire base metals basket, because look at the LME index, it closed higher for the third straight day in a row. A lot of these base metals have continued their strong momentum. Zinc is up nearly 3%, lead is up 2%, nickel, aluminium are also doing fairly sharply, when it comes to the up move seen in the prices of those metals. And on back of that, Vedanta is also seeing a strong rally as well. And not just Vedanta, but a lot of other names from the metals pack.
Okay, that's the take coming in on Vedanta and the entire basket, which is holding out quite well. Meantime, you have a whole host of autos stocks which are in focus today, largely owing to the auto sales numbers that are trickling in. And I think the proof is in the pudding. The stock price of Ashok Leyland is down under pressure. It came out with its November auto sales numbers, which have fallen nearly 9% to 13,121 units versus 14,457. It's come in below expectations. Nomura had expected it to sell close to 14,300 odd units. And in the MHCV segment, which contributes 60% of the total sales, it sold nearly 8,718 units, but that is down nearly 8% on a year-on-year basis. The light commercial vehicles auto sales numbers have increased nearly 16%. Moving right on to number 10, and let's chat a little bit about CESC, Siddharth.
Well, the stock has, it's breaching its resistance zone of 700. And at the same time, we are seeing around 10 to 11% rise in open interest. The interesting part is that volume in both segments are pretty high, Avan. So CESC, yes, you have seen some intraday correction from higher levels, but otherwise stock has been doing pretty well.
Yes, it has. 1% above the 700 mark in trade. Meantime, Kunal, let's also talk a little bit about Apollo Hospitals sitting pretty at a fresh 52-week high, I understand.
Absolutely, Avan. And the stock has been gaining some decent momentum in the last few days. Breakout of multiple time frame charts. In fact, last week also we were discussing this on a market profit segment as well, that how the stock has shown breakout on multiple time frame, both daily, weekly as well as on monthly charts. And the stock has been gaining up higher, now at a fresh 52-week high. I believe that there's substantial potential which is possible that the stock could inch up higher from current levels as well. So I'm revising my targets higher on Apollo Hospital to 1375, and stop loss could be taken to 1285.
All right, watch out, target 1375 on Apollo Hospitals. Moving on then to another auto stock in Mobina, let's talk a little bit about Royal Enfield. How have they performed in terms of the auto sales numbers for Eicher?
It's another month wherein Eicher has not been able to do very well, whether it's with Royal Enfields or with VECV. The Royal Enfield sales, in fact, have declined 6% on a year-on-year basis. It's come in at 65,744 units. Now, not just that, even versus our own expectations, the ET poll was pegging the figure at 73,000. So we were expecting a growth of almost about 2,800 odd units on a year-on-year basis, but instead it's declined 6%. And obviously, compared to what we were expecting at 73,000, the company has delivered only 65,744 units. Interestingly, however, the stock is not taking as much of a toll as we would expect it to believe on the back of these bad numbers. In fact, it's higher by about 0.5% today in Crude.
Okay, keep an eye out on Eicher Motors, and that is in focus. Meantime, so are some of the power stocks. It's good news, Karunya, coming in.
That's right. Tata Power as well as Adani Power are breathing a sigh of relief today. The government of Gujarat has accepted High Power Committee's recommendation for relief for Mundra UNPP. The recommendation unit will help the CGPL to continue its operations. In fact, the order on Mundra will help, it's also expected to get a consent of 4 procurer states on the proposal, and they aim to amend Power Purchase Pact and seek CERC approval. So on back of this development that played out earlier on in the day, both of these companies are very much in focus and are very much stronger in trade.
All right, that's a stock to keep an eye out on, both of which are really flexing their muscles in trade. Moving right on then, let's also talk about another set of auto sales numbers that came out just a short while ago. And you had Bajaj Auto as well, who had the auto sales numbers trickle in. And that came in a little bit sub what the poll was suggesting. You had the total sales coming at about 4.06 lakh units. It's grown nearly 25% though on year. And you can see the stock price has been a little bit choppy. This is versus close to 3.26 lakhs in the year before. The exports have grown about 17% at 1.7 lakhs, and domestic sales have come in high by 31% to 2.34 lakh units. So for now though, the stock has settled at about 27.36. From autos to metals yet again, and let's chat a little bit about how Hindalco is looking, not right now, but how it's shaped up from the word go, Siddharth. Very strong.
Absolutely, and all metal stocks, especially the fairest one, but we are talking about Hindalco at this point of time. You know, a gap of opening of around 3.5%, which took it completely above its 200 DMA. And then we are seeing a steady price action. We are not seeing much of momentum, but an 8% rise in open interest, which means that these are fresh formation of long positions. So all in all, metal names are doing well, and Hindalco is no different.
All right, it sure is doing quite well, 3.5% in trade. Tell you what, let's take a quick breather, come right back. A whole host of other stocks coming up on the other side of Market FataFat. Welcome back. This is Market FataFat right here on ET Now. Let's just quickly address some flashes as well coming in on your screens. Do remember, we have been seeing crude oil prices seeing quite a bit of a soar, and that OPEC decision as well coming in. Some details that we have, that Qatar is now going to withdraw from the OPEC in the month of January, and that is the latest as well that is coming in. Remember, a lot of those OMCs as well have been in focus ahead of that OPEC decision that is also set to pretty much put into gear as to where crude oil prices are going to be headed. Let's move right on then and get right back to all of the stocks that are buzzing away in trade. What should you keep on your radar? Well, Kaveri sees a shorter stock in focus right now. In fact, let's understand what Sameet's technical take is. At 530, does it look like a compelling buy or not?
See, we'll have to wait for further developments to happen. We'll have to wait for some kind of confirmation. This stock has been struggling around its 200-day moving average since last 1.5 months. Today we are seeing a good positive traction in this counter. So we'll rather wait for this stock to give a decisive breakout beyond 540, which has been acting as a very strong resistance. So the stock is on the verge of a breakout, but one should wait for some kind of confirmation. So today, if this stock managed to surpass 540 on a closing basis, then this stock could head towards its near-term levels of 565, 568. So in that case, it can trigger immediate buy call with a low risk buy. So one can keep a stop loss around 528 in that case and go long for a target of 568.
Okay, that's some important levels. Go long on the stock. That's the advice from Sameet. Meantime, some reports with respect to private equity funds entering for NIIT Tech. Mubina, what's the latest report?
Well, ET is reporting that the sale process for NIIT Technologies has certainly gathered momentum. Bain Capital, Blackstone, Carlyle, Apex Partners, Vedanta, some of the other private equity funds that have been sounded out. The founder promoters are looking to exit the company. That's what the ET report suggests. In fact, the first round of non-binding offers is due next week, according to sources. Global and even local players for that matter, like Tech Mahindra as well, as said to have been approached. Do remember that NIIT Limited, that's the parent company, the listed parent, owns about 23.5% stake of the total 30.61% that is up for grabs. So for now, the founders seem to be pressing the exit button on NIIT Tech, and local players as well as global PE players have been sounded out for the same.
All right, that's the take coming in. We'll have to see whether or not anything actually emerges, but taking it easy. NIIT Tech is very quiet at 1,091. But moving right on then, let's focus in on some more auto sales numbers, and not the most encouraging for Tata Motors, Karunya.
Well, the sales at large have not been encouraging for any company. The stock is looking fairly resilient, and a reason for that could be the fact that the street was expecting a much worse set of numbers for the month gone by, because the overall sentiment has been so weak, not just for PVs but even for the CV segment. Let me run you by the numbers real quick. Tata Motors passenger vehicle segment have clocked in nearly 17,000 units for the month of November. Tad below what we had expected as well, despite a degrowth which was pretty much on the cards. The divergence also has been much wider. Tata Motors CVs, 33,500 units approximately clocked in for the month of November. Again, a little below expectations, 5% degrowth seen by the company on a yearly basis.
All right, that's certainly something to keep an eye out on. 175, that's where Tata Motors is at, despite the fact that auto sales numbers haven't been all that encouraging. Well, let's move right on then to Motherson Sumi, and that stock is having a whale of a day. In fact, rightly so. It's been a fairly positive report from CLSA. They maintain an outperformed stance with a target price at 180 rupees. They believe that it's a good story, but it's been impacted only by macro pressures. They've cut, though, the FY19 to 21 EPS estimates by 7 to 14%. They retain their outperformance as the stock has been down nearly 35% in the last 12 months. Away from Motherson Sumi to LIC Housing Finance, and Siddharth, what are the trends suggesting today?
Well, the stock was showing decent bounce back from 400 to 480 odd levels, so there was a 20% bounce back, and Nifty also bounced from 10,000 to almost 11,000 levels today. And from there, we are now seeing LIC Housing correcting since last two trading sessions. Today, why we are talking about the stock? Because we are seeing formation of short positions. We are also seeing that cash-based volumes are pretty high, which means that after bounce back from 400 to 480, which was not supported by strong volumes, now the correction has started again in this stock and volumes have increased. This is a sign of a weak stock.
Okay, indeed it is a weak stock as we speak as well, 2.7% off. Indiabulls Housing, meantime, where could the stock rally up till? Kunal's here to throw some light. Kunal?
So on the weekly charts, Avan, last week the stock formed a bullish hammer pattern, which generally and typically has strong bullish implications. Start of this week, today the stock has shown a good start, and looking at the candlestick pattern, the space of the last 5-6 weeks, I expect that the stock should now start a new uptrend. That previous low of that candlestick pattern should now become a good support, which is 725. I think keeping that as a stop loss, traders could look at a buy. 800 should be a near-term target on the stock price.
Okay, those are some important levels to map out. 5% on Indiabulls Housing. To stock number 22 then, so much going on with crude oil prices as well. Let's talk a little bit about Jet Airways then, Mubina.
Well, lots of news flow, some not very positive, some slightly supportive. First up, of course, I'm going to talk about the fact that they are cancelling 40 flights per week on Gulf routes, a major revenue source now being perhaps stopped. To in turn manage costs. So that's a bit of negative news. The other negative news is the massive rise in crude prices. Brent rising 5% may put in a bit of a negative sentiment. However, what's supporting the stock price is the fact that jet fuel prices have been cut by 11% for December, putting them at the lowest in many, many months. So that, I suppose, would help in alleviating some of those cost pressures. Do remember that jet fuel prices closely tracks Brent, which has in fact in the recent past slipped to below $60 per barrel. So that may be something that's lending support to Jet Airways today in trade.
All right, that'll be something to watch out for. Quite a bit of news flow that's keeping Jet Airways in focus. But thanks much then to our team of research analysts and technical guests for joining in and giving us a heads up on all the stock to watch out for. But before we wrap up, let's move on to some more news with respect to Reliance Communications. And we understand that the arm of Reliance Communications has furnished a 1,400 crore corporate guarantee to DOT. This payment is going to pave the way for the government approval for its deal with Reliance Jio, as been directed by the Supreme Court on just a few days ago. Let's get in Ashwin Mohan. He joins in with the latest details, and clearly a breakthrough coming in the deal as they have managed to furnish the corporate guarantee. Ashwin.
Right, so this is a very, very significant hurdle as far as Reliance Communications asset monetization drive is concerned. Remember, the entire sale of spectrum to Reliance Jio was stuck and it had met with a legal hurdle. The case was languishing in the Supreme Court. But the Supreme Court last week had in fact issued a directive that the DOT, or the Department of Telecommunications, should approve the sale of the spectrum of Reliance Communications to Reliance Jio within a week of the payment of bank guarantees. Now we're given to understand from our sources that Relcom's subsidiary Reliance Realty has in fact furnished bank guarantees of about 1,400 crore rupees to the DOT last Friday. So which means by next Friday the DOT, according to the top court's directive, has to in fact give the approval to the deal. This is a very important deal, about 15,000 crore rupees, part cash and part deferred spectrum liabilities, and it will definitely help Reliance Communications to in fact reduce its overall debt burden, and is also an important step, like I pointed out earlier, as part of its asset monetization plan. And no surprises, the stock is clearly perked up in trade today.
And you can see the news being reflected in the stock price, 16% higher for RCom. With that, it's out of time. Thanks, Ashwin, for giving us those details. Stay tuned. We've got markets at noon coming right up.